2025. It's just a few minutes after 12 noon Eastern. And we're back with our Thursday edition of Chart the Markets. And before we begin, I certainly want to thank our friends at BYDFi Exchange. They are the wonderful people that offer up our trading bonuses every week. And if you would like to be a winner for one of those trading bonuses, all you have to do is have a user ID number under the Blunhouse TA link. And all those links are available under the YouTube description, actually, at Blunhouse TA on YouTube. You'll find them all there. Also, our good friends at FEG Token and SmartDefi.com. If you haven't explored the FEG token ecosystem and SmartDefi.com, I suggest you do so. If you, the SmartDefi.com product will probably blow your mind. So in your own time, check that out. And for an old guy like me, I find that fascinating, and the possibilities are endless with the ease of which it is to create your own token so that you can tokenize your assets. Let's talk for a second and kind of pick up where we left off on Tuesday of this week, because in dramatic fashion, things have changed. And isn't it amazing how quickly things can change? And one of the things that people always talk to me about in regards to technical analysis is that, well, can it protect you from the things that we don't know are coming? Right? And is there a real hard answer to that? Yes and no. I don't think it has the ability to tell us what's coming exactly, but it can tell us that something's coming, right? And I'm just showing you a chart of the Dow Jones. And yesterday and today, we started to flash some sell signals on the Dow, right? And thanks to our good friends here at TradingView, because we're using their charts, and hopefully what we're going to be able to do today is help you understand some of the functionality of these charts as well, because there's so many tools in here that even someone like myself who's been using them for years and years and years probably doesn't know all of them, right? But this is an opportunity for you to ask questions about chart functionality as well. And the reason why I'm saying that is because, here we have on our chart the Dow. It's a daily chart. Is all it's on it is our long short indicator script. That's it. But sometimes I like to know in advance what's coming, or what potentially is coming. Like we always want to know, right? So that we can be a little bit ahead of the game without front running the chart. And how we do that is we drop our time frames down. Because if we're going to pick up a big change, we're going to pick it up on those shorter time frames first, especially on the daily. It'll be something like the 1 hour and the 4 hour. And maybe what we should do here to show more price action, because I'm going to use the futures contract for the Dow, which is YM. So at what point did stuff start to go sideways for us in the markets? Let's drop down to a 1 hour. That was a 4 hour. So this is 4 a.m. Eastern time in the morning, when we start to show that something might be up, right? And this is on the heels of news that at first glance, and the news I'm talking about is the news that maybe says there won't be tariffs. I don't really know how to decipher all of it yet, but the instant reaction in the market was that it was positive. And that's understandable when you first hear it. That would be any reasonable person's first guess. And I guess, if you go back a little bit earlier, perhaps it was, right? Like you got the news and the market took off. But it certainly didn't stay there. And it would be very dangerous just to go super long all of a sudden. sometimes these news moves, no pun intended, don't stick. They don't stick for a lot of different reasons, none of them of which I care about. The only thing that matters is what the chart's telling us at any given time. And as bullish as that news was, the overnight session didn't feel so hot about it at the end of the day. And we get an indication early, long before the New York session opens, that maybe there's something wrong, right? Like the market maybe isn't accepting the news as positive all of a sudden. I don't know. And again, it doesn't matter. It's all you are is focused on price. And the chart was telling you, again, this is a 1 hour. And what do we know about how price behaves? Right? Here's the market telling us, not some guy, but the market telling us that it's time to sell off or to short, however you want to interpret that. And we see all the indicators that we need to see that are telling us that the trend down is intact. Now what? Well, we know once we break one level, we're probably going to find the next, break the 20, break the 50, break the 200. Should we keep going? And what else happens? What do we talk about all the time in here? We show these moves where they fail on the way up. You get your sell signal, you break one level, you find the next, and as current price is looking for past, you take out the previous wave's low. We don't have a crystal ball. What we have is repetitive price action. We have the market communicating with us, saying, hey, this is what I'm doing. Hey, this is what I'm doing. Hey, this is what I'm doing, so many times that we can track it. And that's the beauty of doing these sessions twice a week, is that at some point in time it becomes undeniable to us, no matter what our bias might be, no matter what the news or noise, more appropriately, is telling us or saying to us. This is why we listen to what price on a chart tells us, not what people are saying. I don't know what's going on. I have no idea. I just know that price performs and behaves a certain way based on the metrics that I provide it with. Same metrics that we share with you. Very clear indication overnight that we were getting a sell signal. We have no idea what the next candle holds, other than the market has confirmed that it's trending downward. We hit one level, we break it, we find the next. We hit one level, we break it, we find the next. We take out the previous wave's low. So what do we do now that we've done that? Start switching to a higher time frame to get an idea of where this thing might go. And if we want to add a little more context, because we're always interested in where price has been, in order to find out with some reasonable probability where it's going. And if we use this 4 hour of the same chart, it's the contract for the Dow YM, what do we notice? We notice we broke the 20 and the 50 all at the same time, which is never a good sign in my world, the way that I interpret price behavior. And where did it do that? In fact, it did it in this gray banded area to the right on our volume profile, which we know is lighter trading. It's less dense trading than what we see within this blue area. And essentially what happened up here at on the 4 hour, where the 20 and 50-day average meet, is that you fell off a shelf, right? This was your shelf, and you fell off the shelf into the gap that we talk about, the volume gap. Now, because this is lighter trading, the velocity at which price can move up and down through it is usually more intense. So we're not quite sitting yet in the heart of this volume gap, but what do you think a draw for price would be on this chart? Well, we've kind of broken the 20 and the 50. We're getting our indicator telling us to sell or go short. The upper value range would be a draw for price. It's an area where buyers and sellers have shaken hands in the past. But everything above it is kind of a premium. That's why it's called a value range. But that's the upper value range. And below the upper value range sits the 200 MA on the 4 hour. Below it, the point of control of the volume profile, which is the most dense area for volume. And whenever you see this thin red line on your volume profile, if you're using the same one, you're always going to know that's a shelf. That's the biggest shelf. Whether you can see the bars or not, you'll always know that's the heaviest shelf, and most likely it's gappy above and below that. So we know that price, when it gets into these areas, can cut real quick. And when it does, now we're in the range on the 4 hour of taking out the previous wave's low. And if we do that, while in this gap, what do you think the chances are of taking out this low and finding the upper value range? Probably pretty good from a probability perspective. And for further confirmation, let's look at our stochastic RSI. It's telling you that's down, and the divergence between these two tells you that there's momentum. And what I'm referring to these two is %K and %D on your stochastic RSI. And the settings I use are straight out of the box so that you can see them. There's nothing I'm doing to them that makes them unique or anything like that. Fisher transform was also telling us that maybe we're getting a change in direction all around the same time. And our MACD, which is always a little bit later than the other two, but they typically follow in that order, is now telling us as well that, yeah, maybe this pullback is kind of real on this time frame. And now that you've established that, you can start to figure out where price may go. Price is lazy. That's why when it rips in and out of here, it's just taking the path of least resistance. That's it. Because there's nothing there to hold it up. And if we go to the daily, because this is why we use multiple time frame analysis, right? So if we don't hold the 20 and we break the 20 on this time frame, which is the daily, we're going to look for the 50. Fail one level, find the next. Which means that this gap that we know price can slide up and down real quick, there's a stronger probability that maybe it finds that. Alternatively, because we have three choices, up, down, and sideways, that we bounce, right? Support from the 20, a little pullback support from the 20, but you can see the range between the 200, which is red, and the 20, which is green. And price is going to bounce around in between those ranges until it makes up its mind. Ultimately, your portfolio should have checks and balances within it to protect it from crazy times like this. In other words, if you're trading, you have stops in place so that in the event of crazy volatility like we saw overnight, that you're protected. And that's, I think even more than trying to make money, we focus on saving the money that we have. Right? Because you can't play if you don't have the chips to get in the door. Right? You have to preserve your capital. Which is why I harp about stop losses. Right? There's no badge of honor for not using a stop loss. Right? And if you're, for those of you that are scalping, and I know sometimes there's quite a few, well, you can get eaten up and spit out super quick. Right? But you have to find a methodology that's going to either change how you trade or allows you to adopt to mitigate risk. Do I scalp? Yeah, sometimes. But I'll give you an example. Before lunchtime yesterday, I think it was stopped out 4 times. But all 4 times a little bit green. Because as soon as I get green, I'll slip a stop in there. Especially when scalping like that. You don't have time, right? You have to put some sort of measure in to save your butt. And I'd rather get stopped out with a little bit than not stopped out and lose a lot. It's just not worth it. Like, it's just not worth it. So do what I can't be there beside you, but if you get the opportunity to slip that stop in as soon as you can, do it. Open your trade with it, whatever. You can always move it around. But do whatever you can to preserve your capital and try and take less risk. Because those that just left this naked on these contracts, and there may have been some that did, thinking that nothing bad can happen, this is the best news ever. Well, you know what? Stuff does happen. And what are you waiting to see on this 1 hour? So you had this big move down. If you get a retracement higher, is this going to be first wave down, 3 or 4 green candles of retracement, and then the trend continues, just like here where you take out the previous wave's low, you do something similar, and the beat goes on? We don't know yet. But what I do know is that on this time frame, this for me is still a confirmed downtrend. This was that impulse move down, and this candle can fight back up to these levels, but it's only when it breaks it that we start to take it seriously, because it'll have to move all of this up in order to change the trend for me. So if you are mitigating your risk properly, the crazy events that happen when we're not looking are either well insulated or you're monetizing them, right? Because that's our job, to monetize the chart. It's also our job not to lose everything we have on a trade, right? So you do what you can to mitigate the risk. If you think it's not possible, it probably is, and protect yourself from this stuff. For those of you that have been here for a while, you'll know that when you see this, something's up, right? And sometimes, like quite often, I'm always very interested to see what happens at the 20 on these types of moves, because quite often they bounce, right? This was the first touch and it didn't bounce, right? And then you get that kind of double top scenario, or the trend just keeps moving on. But this one broke, and then it broke to 50, and then it broke. There's a message in that. When you're expecting support, because the rules and methodology that you use empirically demonstrate that there's validity to how price behaves, and then it doesn't, that's usually a problem. And that's what happened here. And that's how we know to use these levels as targets. Like, you literally could have said, I'm going to take 20 off here, I'm going to take 20 off here, I'm going to take 20, like, that's why we use them. But this is where you get when you take it seriously, right? If you take this stuff seriously, it'll look after you. Mitigate the risk. Do the work and treat it seriously, and you'll be really successful. We never know what's coming after the next candle. We just don't. Is all we have to go on is what's in front of us at the time. Right? So the last time we were in here, that's Tuesday, that's when we were here, and we drew this trend line just for fun, and we said we're going to leave it here, and we're going to see later if it means anything. And if I recall, I believe we even had, I think we did some fibs real quick at this level as well. Right. Remember, because we were talking about, okay, hey, if we just, I'm not sure this is a top or not, but just assuming that if it is, I'm trying to get an idea of what a retrace may look like in advance. And we remember we had that conversation, and then we said somewhere around 88.8, somewhere in that neighborhood. An opportunity to connect that top. And here's an example of where prices come back to the 20. We'll see, like on the other chart where it just failed it. We'll see what happens on this one. Oops. But this is all repetitive. This move here goes on forever, for literally months. And at no time did you even have to think twice about how to manage the trade, because the market was telling you how to manage the trade. And it's going to tell us in here as well how to manage this trade. And what's interesting kind of about what we've done here is, all right, this is the first touch of the 20. Typically, as a rule, we get support, and or price likes to bounce. And for the sake of the conversation, let's say it does bounce. Now we've established an area that we're kind of interested to see if it would break or fail at. If it breaks it, well then, hey, we're going to have that double top conversation, or it's a continuation, right? That's the conversation we'll have if that was to unfold. But if we fail the 20 on this daily, and it might not be today, this can take days to transpire. But if we do get the market changing its mind, or we'll get told, right? And even today, right, still in this trade if you're long. You know, this is the first touch of the 20. You'd like to know if it's going to hold, and if it does, maybe it bounces higher. If it fails here, well, you have no crime in taking your money off, right? But the market is telling us on the daily it was okay to stay in this trade for as long as we have. It's not up to us to overthink it. It's only up to us to follow what the market is telling us to do, or telling us what it's doing. That's what we have to do. There's no points for thinking that we're interpreting something that may or may not be there. This is oil, and oil is still, you know, people are talking that it's going to go parabolic, and maybe it will, but it still hasn't, and it's still maintaining its kind of bearish traits. It's still trading below those levels, right? Failing the 200, this is the weekly, failing the 50. This divergence down has stayed intact, telling us that the move down is still intact. You've had a few challenges, but nothing that's able to change trend.
Quick question, Blunt.
Of
That
course.
red line kind of curved
This
to the
squiggly
right.
line?
Is that a new indicator you haven't told us about?
No, that's just, I was trying to demonstrate for someone a few days ago what I thought this was going to do, and I didn't take it off, and
That's your Picasso part.
so, yeah. So, so far I've been pretty accurate. I just thought it was going to do this rule like we
Right.
talk all the time, and it kind of is.
Yeah.
And, you go down to take out this previous wave's low, and yeah, maybe you just keep falling. Like that's my next range, that 51 and change area, somewhere in that neighborhood. We'll see. Right? But as far as what it's doing on the chart, it's still bearish to me. Right? That's all I can say. I don't know why it does what it does. We just know that price performs a certain way. Doesn't matter what asset we're trading. It could be a meme coin. It could be something like oil. It could be anything. Right? Oops. Right. We've seen this could easily be a 15-minute chart that we're looking at of something else. We've seen all this before. This is a perfect staircase up. And for those of you where we've been hanging around for years, we've seen these staircases before on this asset, both up and down. And when this thing gets in one of these staircase modes, just get out of its way. Right? We've seen this before, both up and down. When it starts staircasing down, again, get out of its way. Like Eduardo, I think we've seen this going back since I've known you about 5 years, countless and countless times. Right?
I know,
So,
I know. Priceless,
yeah.
priceless.
So the staircase, when I see the staircase, I know that it feels pretty serious, and it is. Um,
Now, if I may comment, I don't want to interrupt your,
yeah, yeah,
but the year is 2021, about October, November, and there's this guy called Blunt saying, guys, uh, the Federal Reserve has just given us a fair warning. We're going to start going down, down, down with the free money and all that. And uh, unfortunately, I guess I didn't know enough back then. I heard it. I heard it several times from you. But as you said, I mean, it's after a few years, I understand and now I'm familiar with it. Hopefully, anybody that listens to this today, tomorrow, in a year, pays attention to that downstairs pattern we're probably seeing right now. We never know. I just wanted to add that.
yeah. It's. I appreciate that, and I think is all we're doing is just we're not front running, right?
Yeah,
We're just following, and I'd like to think that because we're following, in theory, it should make the job for us a little bit easier, right? Um, because it takes a lot of our thinking out of the chart, and it doesn't matter what the asset is. This Nvidia weekly was pretty clear on the direction, up until it got a little hairy up here. But these are the kind of things that we look for, right? These long, smooth moves, whatever they're on, shorter time frames or longer time frames. The noisy charts are the ones that kill us as traders, right? And they provide dead money for the investors. so nobody really wins. But we're just following. That's all we're doing. And sometimes the following is, really easy. This is an Apple chart. Just take off a few things here. Like this is the part where we say, can we do what we're told, right? So if the market says, hey, time to buy, Can we just acknowledge that and do it? Or are we playing this game in our own heads about what to do, what to do, what to do? What did Tim Cook say? What do the tariffs mean? What, before you know it, you're taking prescription meds. The chart's telling us what we should be doing, whether it be buying and going long or shorting. Right? The market is telling us this stuff down here, that's the insurance we pay. This little stuff at the top, that's the insurance we pay to make sure that we're on the right side of the trade. We're not here to pick the bottom. That's not what we're trying to do. We're just trying to find on any time frame that we trade a safe, profitable entry. We're told down here by the chart, which is listening to the market, that this is an appropriate time to buy. And okay, on this weekly chart, what if you bought in the middle of this candle, or even you bought up here? Are you disappointed? Or even if you bought at the top of the wick, if that's how it ended up. You might think so at first. But when you have a trend like this, or a chart like this, doesn't matter what chart it is, that looks like this on the way up, I don't care if you cut the wick. It doesn't really matter. Are you complaining about it up here? Probably not. So if we just do what we're told, here this big candle down, which would have stopped out or washed out a lot of traders, did not break trend. It did not break trend. Not till up in here. And then what happens? You kick again like it was, I bet you there's something in there. There you go. Giving us some support. What was going on here? First touch of the 20. What happened? You got that support you were looking for and price cut a bit. Up you went. What do you see about this doji? Right. When you see candles like this at the top of big trend moves, they usually mean something. And I'm not suggesting that, people sell every time they see one or something like that, but it means that you need to be looking at everything that you're using on your chart, because in all likelihood, there may be a decision to be made at this point. Right? So you don't have to panic all the time, but just be aware of them. Right? They don't all turn out to be nightmares. But as a trader, these are the things that you pay attention to on a regular basis. I am not the best candlestick reader in the world, nor do I claim to be. But I know enough about them to tell when I should be paying attention to what's going on the chart. And when that happens, then out come the multiple time frames, out come the different levels of support and resistance that we can find, whether it be in volume profiles or in moving averages, or just past benches of price, whatever we have to work with. Right? Now, this is one choppy apple chart. It really is, which is not typically characteristic for this ticker, but under certain circumstances, we can see how we get there. But the one thing that we can take away from it is that the market has told us that this trend down has not broken. Now, again, I know we show this all the time, but it's really important. Because when we look at the candles, we're like, oh man, I'm in, I'm out, I should be in, I should be out. We're going higher, we're going lower. That's the mania that we go through all the time. Those individual candles or series of candles might convince us without a doubt that a trend is changing, or you're about to be on the wrong side of whatever. But at the end of the day, The direction of the trend for me is absolutely key. Now, what's interesting about this Apple chart is where's all this activity happening? This is a weekly chart. And essentially, this is a premium on a weekly chart. Okay, that makes sense, because maybe the market doesn't like the fact that it's paid such a premium and it's pulling back after breaking one level and literally splitting the 50 in half on the weekly and then failing it like this, while the divergence stays intact. Maybe the market was looking for another level. Break one level, find the next. Hello, 200-day moving average. Big bounce, but look at what happened in here. Absolutely nothing. So all of this was just absolute drama for the drama queens. Big red candles, big green candles, up, down, buy low, sell high. You'll never see price this low again. We're going to go make all-time high. So it's going to take out the 200. I don't know. All I know is that the market's telling you that this thing, regardless of all of the daily soap opera drama or weekly soap opera drama, that the trend is down. What you choose to do with this information is ultimately up to you and how you use it. But we've shown it time and time and time again, and when we put all these things together, you have a pretty potent recipe. This happened at essentially all-time high territory in the area of a premium or price exploration, however you wanted to characterize it. I don't care. All that it means, though, is that if you don't have the wind at your back while you're up here, as soon as it fades, so do you. And where do you fade to? You fade to a level where price has been in the past, where buyers and sellers have shaken hands, and it's going to be, as a target, the upper value range on the volume profile. And because you failed the 50 and you failed the 20, you haven't, and you got to remember, one day these are going to be first touches too. What do you think we're looking for? Maybe the 200 again, or absolutely the 200 again. And in all likelihood up through here, when we flick on the 100, where are we? There you go. We've had support from that moving average before, not long ago. As a matter of fact, it's where a big bounce came off of. So not only did we fail the 20, we failed the 50 in a big way, and then when we tried to challenge it, we completely faded, split another major moving average in half. And remember, this is a weekly chart, so it's a 100-day moving average on a weekly, so what does it represent? Exactly. Price challenges on the weekly right at this level in here, the T line, and fades right away. Look at, are we doing this again? Like we just showed on the other chart. Take out the previous wave's low, which means we take out the 200, and you still have to deal with this gap down here. And there's your point of control. The most concentrated area is always going to be your point of control on the volume profile. And again, what do we know about the areas above and below that thin red line if we're not looking at the bars? That in all likelihood, there's a gap in there, and there is. So this is going to get really interesting. Really interesting. And not just, for Apple, there's going to be lots and lots of stocks that are going to do crazy things. And we're in a time where it's really hard to plan, right? Like we went from kind of planning how to deal with tariffs to maybe planning how not to deal with them. I don't know if I'm any farther ahead in that. So it will be really interesting to see how this plays out and how it affects not just the stock market, but the commodity market. The crypto market is obviously gyrating around as well. So this is, this is going to be really interesting. And the only way that you can manage it is to protect yourself from the volatility. And if you learn anything from trading or learning to trade in this type of environment, I hope it's that. Learning how to protect yourself in volatility. This is a chart for Bitcoin, and it looks like a pinball machine on the 1 hour. How does a person trade this? Ranges, levels, just like anything else, in multiple time frames. And this is a beautiful example of that. This is why the volume profile to me is important, because it allows me to trap price within a range, and I can do that with moving averages, and I can do that with benches of past price and draw the appropriate lines. But this is a way that I can trap price within a range and then track it on multiple time frames. This just happens to be the 1 hour of Bitcoin, but there are obvious trades within this range, from the lower value range to the point of control and to the upper value range. And why they're effective is because they are draws for price. So if I start to fail that upper value range, and you'll pick that up on, obviously, on the shorter time frames, but when you start to fail those ranges, you automatically know what your targets are. Right? If you're short, you're automatically looking for the point of control down here, and you tag it. And you have the opportunity, even on this time frame, even on the 1 hour, to trade the ranges, right? If you wanted to. Ultimately, this was a down move, but the ranges are there for you to trade, right? Price is kind of trapped in this zone, and then you can attack it from different perspectives, different time frames. And you know that once you get out of those ranges, that you're either going to have a real nice breakout, or chances are a significant breakdown. And those are the ones that you can really monetize, the breakouts and the breakdowns. And it, again, doesn't matter the chart. Here's our squiggly line on oil, just a little bit rastered from being on a different time frame. But, can you trade an hourly chart of oil? Yeah, this is choppy, you don't want that. Here's a nice breakout though. Any time frame, any asset. It's right. We see it over and over and over again. All of this stuff repeats. Now, I know our friend, we have someone who really likes Solana. Let's look at Solana's daily. If you are trading Solana, you absolutely have to know what's going on the daily. And it's really important to note these levels, right, along the 5 EMA or the T line. So the reason being is because we know, here's an example here, that price can move up and then comes back sideways. And where do you re-enter? You re-enter somewhere along the T line or the 5 EMA, but you need to know where it is on the daily so that you can add to the probability that you're making the correct trade on the shorter time frame. You want the wind at your back. Right? Where do we think this is going? No different than any other chart we look at. This is the lower value range, by the way. So you're actually failing that as you come up and try and challenge it. What do you think the chances are that you fall into this gap? Once you eat up the shelf and you start getting into here, price can sink really quickly. And if we go to a 1 hour, even There's the 4 hour. Lots of warning. It's just multiple time frames. So that gap that we were showing on the daily, this is it on the 4 hour in here. So you can pretty much be certain that on the 4 hour, if you fall off 165, it's going to be problematic on the daily. Where's 165? It's basically this. It's basically this in here. So you fail that, which is basically structural support, right? So if you fail this structural support, that's what gets you into this gap to the downside on the daily. This slippery slope here. And what does that tell you? Well, maybe you start looking for short trades, right? If you haven't already. So here we've failed the 20. We have the 50 sitting well within that gap on the daily. And you've already failed the 200. So the takeaway from that is probably a little bit bearish. You know, you got support from the 20, support from the 20, support from the 20 for like a day, and then you fail it. You get a confirmed signal. Are you going to listen to that or not? This is where ultimately you guys have to be the ones to take the wheel, right? And say, regardless of time frame this is, could be an hourly, doesn't matter. But you could be looking at this time frame saying, you know, it looks like there's downside opportunity here. Or you sit here and you say, I love Solana too much. So much that I'm just going to hold this and hold this and hold this. Right? I don't want to be the one to do this, but you know, how many people in this space will hold something all the way to the bottom and beyond, right? You have an opportunity to monetize this chart. Monetize the chart. Mitigate the risk and monetize the chart. And you can't say anymore that you don't know how to read these things, because you do. You basically kind of found the 200 MA on the daily and created a pretty intense allergy to it, right? So when the market tells you that it doesn't want to break a very relevant level, you have to listen to it. You can't sit here and say, you know, I bought way up there, but I'm still going to hold out of principle. There's no prize for principle. Whether you're trading contracts or you're trading spot, or you're trading a 15-minute or an hourly time frame, or you're in it for years. I just don't understand how people let money go dead, right? I have a hard time with that. This is a situation that you can listen to your chart or not. You know, we will see how this plays out as well. Right? But we've broken one level, or unable to break a level. We failed one. It's not unreasonable to suggest that we somehow find the 50, which is a key level for us, well within, or at the bottom of a shelf rather, of a volume gap within a grade barred area that's light trading. Anywhere in our streams has that recipe made up a bullish move in this scenario? No, it hasn't. No, if we turn the chart upside down, yeah, it would be bullish, but it's not. Everything that we use to determine what may happen next is telling us that there's probably downside risk here. Failing the 200. Failing a major moving average and getting a sell signal at the same time. Failing a value range into a gap, all of that stuff. Listen to the chart, and you'll know when you're evolving when you find yourself doing that. When you're able to say, ugh, I hate to admit it, I want to go long, but the chart's telling me no. Then you know you're evolving, right? And you're starting to see the light at the end of the tunnel. Follow the chart, listen to the chart. Everything else that we talk about is just literal noise. Here's the 12-hour Bitcoin. I like the 12-hour Bitcoin. It sometimes feels like the true daily because we trade 24/7. I don't know. But what do we learn about it? Well, we learned that on the 12-hour we failed that 20. Right? The 20 that we're trying to hang on to on the daily, we failed on the 12-hour. There's the 50. Fail one level, find the next. Doesn't necessarily mean you keep cascading downwards. All it means is that you'll find another level to determine whether or not you get support. And every time you find those levels, there's kind of a little bit of analysis that you want to do. Right? You had a lot of support from the 20 on the way up here on the 12-hour. Now you've failed it and you have not tested the 50 yet. So that's what we're waiting for. Time and price will find a way to come together. If this candle finds its way into this gappy area here, oh, well, maybe that's how you find the 50. And lo and behold, look at all this past price to the left of this, which is really part of what the 50 is picking up to, because the moving average is a representation of time and price. There's the shelf. Like, you can kind of see how it unfolds. It's simply, in this case, it's the anatomy of a breakdown in real time. I don't know, folks. Let me just take a few things off here. But if this is what we were looking at, our stochastic RSI is telling us, our Fisher transform is telling us, and I've had to blow this up as large as I can, and you're probably losing some of the detail, but you're starting to get indications that maybe something's up on this time frame. You have no understanding of what's going to happen with the next candle, which is why you can't front run. Because, Murphy's Law, and I'm sure you've tried, all of you, to cheat or get a little bit of a head start only to get kicked in the pants later on. And when I say later on, I mean another candle or two after that. It doesn't take long, right? But we simply wait to be told what to do. But when you see this type of extension in a stochastic RSI being overbought like that, same with the Fisher, and then you start to see indications that we've demonstrated time and time again are telling you that there's a direction change coming, we have to pay attention to them. We really do. That trend line actually means something in this case. We'll see if it means anything beyond today or tomorrow, but so far, we'll see if we get another rejection from it. If we do, it tells us there's a lot more happening. This 12 hours still says more down, right? So I feel, knowing now, right? So if we're just using only what we see, we would be looking somewhere in this neighborhood. We would be looking for this bench of past price. We would be looking for the shelf, which was created from this. This volume shelf was created from that bench of past price. We'd be looking here. when we flip on the 50-day moving average, that's simply an additional validation that we're probably on the right track, because we know from our analysis that when we fail one level, we find the next, and then it just becomes systematic. If we don't hold the 50, this gap in here only brings us back down to the upper value range on Bitcoin. So this is where we have to analyze three things: the downside risk, the upside opportunity, and then what sideways looks like. Because we could be there for a while, right? Those are our three choices. Downside risk we've talked about. The upside would be getting a bounce somewhere in here and then testing the previous wave's highs. And then we'd have to test all, some other stuff here on the way up, which is a little bit of work. Or sideways. Could you chatter along this level? Yeah, perhaps I could see that, but those are the three options. The strongest of the three right now, based on how we're interpreting the chart, is probably the downside part. Look at this gap on the 4-hour. Yikes. And when we get into this, like for those of you that are using this volume profile, or any of them for that matter, when you see a gap like that, look out. You really want to stay out of it, because price will be drawn to past price. Path of least resistance, where buyers and sellers have shaken hands in the past. So when it takes the path of least resistance, it's likely to find this area in here. And another draw for price is the 200 MA, which we can't ignore. So you run the risk of losing the point of control and dipping down even a little bit further. But this is just a process, right? It's just, we're correct until we're not, right? When the chart invalidates itself, then we just move on and we take a different perspective and we try and find the next opportunity. You're not insulted that price change direction in any way, shape, or form, right? It is not a personal thing. All we're looking for is our own opportunity. And we're only right for so long until the chart turns around and invalidates our trade. And that is the game, right? That's how this works. Take your money when you can. Now let's take a look. Does anyone have any symbols they want to look at? I know you guys always have some, and some of them I've never heard of, which is kind of cool because they're usually a first look for me too. So if you've got them, do share. Because if you don't, I'm just going to keep rambling on.
Hey, Blunt.
Hello.
How are you? Thanks for jumping in and hosting. But yeah, I did have a chart that I was keeping an eye on. If you don't mind to look at Jasmy, Jasmy.
Yeah. Okay. So you're kind of at a key level here right now on the daily, to try and hold the 50.
Yep.
Listen, so what's the good news? The good news is that you have taken the 50 and the 20-day moving average on the daily after a long downtrend. So, the fact that you're able to gain the 50 and hold it for a while is a good sign. Right?
We're sitting right above that 50, right?
Yeah. And today's candle is a bit of a little doji. So actually, let's back this up a little bit.
On the Blowfin exchange, I was looking at the weekly. It's still far away from the 50. But it still looked like it was on a little bit of a downtrend, being under the 20 on the weekly.
Yeah, no, you'd be 100% right on that. And I think, look, so here's that gray area of the volume profile, which is light trading. Right? So anything that can happen in here can happen with some velocity. Your stochastic RSI is, really kind of treading
Yeah.
that bottom of the ocean, and it can do that for a while, right? Like it could stay down there for a bit. The fissures diverge down, and the MACD moving average and signal line have not broken zero, but could do that if price dipped much below here. What I would
Sure.
be
I was looking
looking
at the.
for,
Go ahead.
sorry, is that this level holds, because this is your previous wave's low, right? So here's your downward move, your extension up, and your retracement down. I don't want to call these wicks taking out this low. You really want to see a body close down here, but this would be a critical level for a few different reasons.
Yeah, I definitely agree. I was excited looking at the daily, noticing the volume profile. It's not at a premium; it's at a discount, I believe.
It is, yeah. It is. Here's
Trying to
your
monitor that.
here's your weekly, and you kind of have, this is like, look at the 20. It just doesn't want to break. It just doesn't want to take the 20 weekly.
Right.
So what I think might happen here is you get this move up that fails at a critical level and then pulls back and takes out this low. Now, this is a weekly chart, so this isn't going to happen overnight, but I think that's the potential to the downside.
Understood.
And all of these things are subject to money coming in or leaving the change's direction, right? But typically we know how, or what the potential is for price to behave a certain way. You don't have a sell signal here yet or anything like that on the weekly, but you can see how it's a little bit overbought on the weekly.
For sure.
So
I have a question. I was just thinking about, did you happen to notice, or do you ever take a look at the Bitcoin dominance? When you take a look at, I guess kind of like an overall view of the market before you would look at altcoins?
I used to have. I it's not something that I leave in here as something that I check all the time. I know there's a Bitcoin dominance chart and stuff. I only trade, like, I think the Bitcoin chart probably tells you everything you need to know, to be honest. And then there's the total crypto market. That's this one.
Sure.
It doesn't look too much different from the Bitcoin chart, does it?
Right.
Because I only trade and monitor a handful of things, I don't think I get too lost in the weeds of what's going on like the intricate intraday blah blah blah. I don't get involved in that. I'm going to chart Bitcoin. I'm going to chart, I think I've told you guys, ETHFi I like to trade, Layer, alt, Scale. Those are a handful of things that I'll chart. Those are the alts that I'll play. Sometimes a few other things. But I feel like I have a pretty good handle on everything. So, if Bitcoin and ETH are feeling soft to me, and, you start to feel a little bit of pickup in energy in the alts, then, I pretty much know what's going on. But it's all just a chart. I don't get hung up in the how much is it, or do I want it to go up or down. Like, I'm indifferent to what it is, and I'm indifferent to what it does.
Understood.
I just want to be there when it does miraculous things up or down.
Yeah, I suppose that could kind of cloud your judgment, getting too involved.
It totally clouds my judgment, and I'll be the first one to admit it. Like, I've said it before, and maybe it's a knock on my pride, but I had to write this to protect myself, right, from thinking too much, or having my bias kind of get in the way of proper decision making.
Right.
And you know, I talk a lot about the language of the market, and I believe that's what this is. And I was my own worst enemy in sometimes not listening to it. So this was a way for me to kind of hit myself with a hammer, and just have something that I'm not just that I could follow, but that I trusted. Right? And because it's my own methodology, I guess instinctively I trust it, so I'm more inclined to follow it. And when I try and cheat my own system, I'm the first one to get kicked in the teeth. I swear, it's like, anyways, it's,
Oh, yeah.
I do it too, and I have to remind myself from time to time that, hey, idiot, I did this for a reason, so just use it, okay? So,
Yeah, keep it simple. Yeah,
yeah,
I hear you.
yeah, and you're right about the simple part, and especially now. So there's a lot of people that I know when things are chaotic in markets that the first inclination is to layer on more things to your chart to try and see
Right.
something that maybe other people aren't, or to give you clarity that you think you're missing. When in actuality, it's a perfect time just to maybe reduce what you see on your chart. And that's why I'm very comfortable
Hmm.
with just using a volume profile and this and the script to manage my trades, both from the entry and exit point of view, long and short, and then once I'm in it, because this kind of does that for me. And when I need further validation, then yeah, I'll slip on the stochastic RSI and the Fisher transform and the MACD, and I have a handful of moving averages that I like to use. Um, and there's a certain way that I use them, yeah, but there's not really a ton on the chart. Like, this is ETHFI. Like, you can see why I like to trade these things, because over an appropriate time frame, you get real nice swings. And if we're stuck
Mm.
focusing on these 5-minute charts or 15-minute charts, sometimes they look really noisy. This is actually not so noisy because of the volatility that's been in it. But if even, again, this is a 1 hour, and even if you were entering one off the 1 hour down here, that's a nice run on the upside. This one is beautiful to the upside. I missed it,
Mm.
right? And look, we all have life, right? Like, one of the things as part-time traders or even full-time traders, you have to have a process in place so that you don't miss the opportunities that you want to catch. So, and this is what I was kind of referring to at the beginning about using TradingView as a tool that can not just add value to your trading, but create it as well. And let me explain. So, I missed this move on the hourly, right? And I remember at the time I was unhappy with myself, but why did I miss it? I simply missed it because I wasn't aware, right? So use the TradingView alerts on whatever trade, whatever you're doing. So maybe a better example is the futures market. So I find that overnight there's real nice moves in these in
Mm.
futures, and I don't know why. Like, they are
Okay.
what they are. Like, I'm not here to analyze the psychology of it, other than how it shows itself on the chart.
Sure.
But what I like to do is, maybe this is going to be too noisy. Nope. Like on the 15 minute, as an example, I'll set a simple alert that aligns with the parameters within my script. Like, a 5 EMA crossing up through 8 EMA on a particular time frame, so that I don't miss these things. So, this is a simple thing that you can use on TradingView that will help your trading immensely, or whatever platform you're using. But it's super simple, right? You just right click on your chart, hit add alert, and it'll apply to whatever you're trading on that chart at the time. And then it just gives you an opportunity to set those parameters, right? So
Oh,
I'm looking
cool.
for price to cross up or down, right? So I'm looking for, I want the 5 EMA to cross up through.
Oh, wow. I think you just taught
Another,
me something.
yeah.
You
So
can actually set the parameters of which the moving average moves above or below another.
sure, yes. In your like,
Oh,
actually, if you can
okay.
see, I don't know if you guys can see this or not, but
It's a
from the
little blurry, but
yeah,
I'm following.
from the condition window, you have everything from EMAs to the moving averages that you have set, and then you can choose to cross it up or down, or crossing up or crossing down. Um, moving up, moving down, a percentage move, moving in and out of a channel. You have the opportunity to set all of that and a time frame, right? So I think this is the 15-minute. You could set it on whatever time frame you want and how you want it to trigger, once per bar or several times per bar or per minute, whatever. And then you have a date range as well
Oh,
that you can
wait.
use. Yeah. So
That's really helpful. I appreciate that.
no
Thank you.
problem. That's why we do this. And TradingView's made it super simple. It's just literally a right click and then just kind of set the parameters and you're done. And then where it will show up is up here, in where you see the little clock on the right hand side.
Mhm.
It'll show up in there. Okay.
Blunt,
I,
quick question for those of us who have the indicator, your indicator.
Mm-hmm.
Um, is there a way to get an alert when it flashes on a certain time frame?
Um, Not yet, but there might be in the future. Thanks, Eduardo.
All right. All right.
Yeah, so that's one of the things I've actually kind of looked at is, can I build an alert into it?
Yeah.
Which I'm sure we can. But for any of you on whatever you're trading, it could be as simple as you could have it when a moving average hits a certain price, or when price hits a certain level. There's so many different ways to set it up.
Yeah.
But most
Yeah.
people kind of forget that it's even there. And then we
Yeah.
wonder, like after the fact, we go, damn, I missed that.
Yeah.
Right? Well, we don't have to.
wow.
Like when my alerts get triggered, one will show up on my monitor. I think I get a text message, and I probably get an email too. So even in the middle of
Yeah.
the
When
night, I'll
when
probably
Walmart has cherries on discount, I usually try
yeah,
try to
yeah,
get
yeah,
alerted.
yeah, yeah. So as an example, if we were trading in the middle of the night, and you got a signal that there was a buy scenario here, at least it would draw your attention to the chart so that you can make a decision, right?
If I could pick your brain one last time,
Of course.
I suppose the five breaking through the eight is powerful. I always recall you. I've been trying to monitor when price would hit. In the event I was going to go long, I would try to wait for it to tap support on the 20 or 50.
Hmm.
So I guess would you recommend, or have you seen in your experience other powerful validations, like if the 50 would blast through the 200, or I know you like to use 1,000. Is there
Sure.
any
So
other kind of moving average crosses that you kind of look for?
um, yeah, well, I think, again, regardless of whatever time frame you're trading, when you
Mhm.
have short-term averages crossing down through longer-term averages, that's typically kind of bearish. When you have the shorter-term averages crossing up through longer-term averages, that's typically bullish. So
Right.
that's, I'm always looking at that. This would be on the 15-minute, an example of where you have shorter term averages crossing down through longer term averages. The 20 crosses down through the 50, and it's crossed down through the 200. All of that is bearish in itself. Then there's, of course, whenever the 50 crosses down through the 200, that's the what do we call that? Not the
Death
golden,
cross.
the death cross.
Thing.
Sorry, yeah, and then vice versa with the to the upside, and on the smaller time
Awesome.
frames, is it as meaningful? Probably not. Even on the daily, there's usually a lag in there, but there is some legitimacy to it for sure. So this is all the tools and processes and things that we do to validate what we believe is going to happen next. And actually, this chart right now is a real good example of that. So we're in
Yeah.
a confirmed downtrend. All of these kind of crazy candles that we see that make us question our sanity really don't mean much. Now we're in a situation where we've got that kind of fishhook look, right? Where you might
Hmm.
get price pulling the shorter term average up through.
Right. Right.
What do we know about the first attempt at a major moving average once it's been breached?
It'll be rejected.
That the first attempts have a higher probability of failure. So this is the kind of scenario that would typically get me every time,
Mhm.
right? Because I'm eager and I want to catch a bottom, and I would catch the bottom. And then I'd long, and then get really excited and feel good about myself. And let me actually kind of just remove this stuff. I'd feel real good about myself, thinking that I was, on the way to something, only for
Yeah.
it to roll over. And what I was what I was finding is that I wasn't paying attention, and this is early on, right? I didn't understand the relationship between price and a major moving average on its first attempt, either up or down. Now I do. So I'm much more aware of what can happen here. And then furthermore, I now have a measure to help me manage my trade, right? And on this 15-minute chart, and there's only 25 seconds left on this candle, but we still don't have a buy signal, and we have wicked that 20 MA on this time frame and pulled back below the POC. I'm waiting to see if this does one of these again, right? To see if we make a move higher. This is, and I'd be really excited about and happy with myself in here. Okay, now we're getting a signal, but we still have to break through, because this is where I would get kicked in the teeth every time. I'd go to long this only to have it fail here and not understand why, and then roll over. Right. So now I watch this very differently than I ever did before. Right. I'm watching to see the major moving averages. I'm looking at the volume shelf. You have to remember this is a pretty big shelf in here, so it might
Yep.
not pass through it right away. But momentum wise, sure, it looks like it wants to kick up, but this is an example that would get me every time. And now I manage it very different. Oh, there you go.
Right.
So,
And then what I thought was pretty neat. How were you able to remove the candles?
so,
Just basically looking at the moving averages. That's
so what I do, so
much different.
if you go up into the top left-hand corner of your screen, so for all of you on TradingView, you can kind of follow along. Just go up to the top left-hand corner of your screen where it tells you what the asset is. So
Yep.
it says S&P 500 E-mini future. Then what you do is you click the three dots, and it'll bring up this menu. And from there, is all you do is hit hide, and it'll take your candles off.
There we go.
And you'll probably find that as soon as you take your candles off, your anxiety level drops.
Yeah, I want
Right?
to mess with that a little bit. Just checking out the moving averages and try to get a different view or a feel and
Yeah.
just understand it a little bit more. I
Yeah.
like the idea how you said the moving averages on more or less on a longer time frame. Kind of paying attention to that short term action, moving average, and whether it's going to blast through up or down against the longer one. So that's kind of what I want to practice and monitor as well. would you suggest like a weekly? I mean, I know obviously the longer time frames would be more helpful. Where would you kind of cut it off? Like, did
Well,
you mention a daily is too short, or
for
four
what
hour is definitely too short?
for what type of
Just I guess just to mm,
to get the ebb and flow of how a price moves?
yeah,
Um,
yeah. Not necessarily trying to jump in a trade right then and there.
sure.
Just kind of help with the direction.
Try like just using maybe a 4 hour of something that has, reasonable price movement. Maybe BNB is even better. No, it's choppy too. Try the
4 hours.
fives.
Okay.
Yeah, try the 4 hour. Because what you're trying to do is take the noise out, right?
Yeah.
Yeah. This is BNB's 4 hour.
Okay.
You broke the 20 and now you're going to test the 50 again.
Yep. Okay.
And you'll see, um, it again, it's not pin the tail on the donkey, right? We're really trying to get people in the right area at the right time so that you can mitigate the risk and maximize what you do on the chart from a profit point of view. But it's a repetitive, process driven, discipline driven, whether it's a hobby for you or a alternative income, right? But
Right.
one of the things that really bothers me is that people will spend years trying to, and I mean literal years, trying to learn how to interpret a chart and translate that into trading. When in actual
Oh,
fact, you don't need years, right? You just need a reasonable amount of time with the right information and able to interpret it practically on a chart and follow that chart. That you can do in 10 or 12 hours. Like one of the things I've actually thought about doing, and you guys can tell me if you think it's a stupid idea or not, but I'd, I'd like to do a Blumhouse boot camp, where we can
sign
take,
me up.
yeah, where we can, thanks, because where we can,
Can
take
can I
people.
can I throw in my nephews, 7 and 9, 8 and 9 years old?
Yeah,
There you go.
the young people can eat this stuff up really quick. But actually, Eduardo, Gustavo would be a great example where Eduardo actually approached me and he said, I'd like my friend to be interested in learning from you, but he doesn't speak very good English. He speaks Spanish and I speak zero Spanish. And I thought, well, as long as you're there, Eduardo, to fill in the blanks, I think we can do this. And we did. Like,
And it was very productive. Very
yeah.
productive indeed.
So if we can
Wow.
take someone who has, literally uses English as a second language in, 10 hours, 12 hours, get them on the track to make safe, profitable trades, I think that's great. And that's one of the things I've considered doing. So,
Oh, that's wonderful.
but
Definitely be excited.
yeah, but you just follow. I think that's the key. Is just following, right? Following price, using multiple time frames to find good entries, and once you're in them, monetize them. Right? Like all I'm doing when I'm trading this asset is just following the chart. Right? Just simply following the signals I give. Now, sometimes I get stopped out. That's okay. Like that's not a crime. You're not going to go to jail for being stopped out, right? So it's a good thing. And you'll notice that the more frequently that you get stopped out, the longer and better your trade, like the more trading you're doing and more profitable you are. And I wanted to share this because we talk about this all the time about the amount of leverage we use thinking that more is better because we want to make more money. That's the Coles Notes version of it, versus lower leverage to see which one is more profitable. Right? Well, I played this game with myself over the last few days, trading actually this at higher lev and then lower lev, the same amount of principal. And guess which one I ended up being more profitable on and having less stops in washouts? The lower lev.
Wow.
Right? So, just to prove to myself that what I'm saying is legitimate, you gotta be really good all the time. Really good all the time to use a lot of leverage and be successful consistently. Because, there's just so much, the drawdowns are intense and so is the volatility. So, again, dropping the leverage and being able to stay in the trade 30-40% longer actually works out to your benefit. So,
Wow.
consider these things. Like you don't have to use high leverage to make money.
Good point.
You know what I mean? So, the temptation is always to use it, and it's really not necessary.
And I had a kind of, sorry to cut you off, type of beginner question. Obviously, this leveraging is new to me. Would you suggest a different chart to look at? Because I noticed there's perpetual charts. Like
Yeah,
if you were to look at,
you can use the spot chart as well, right?
yeah, most of the time I'm using the spot, and I didn't know if I would be inclined to long or short with leverage. Should I be looking at a different type of chart? So let's say, would it be the perpetual chart, or
So
I
yeah,
couldn't find anything that said futures on crypto. I'm just
so
uh,
when you see a chart that says perpetual, that's going to be a futures chart,
thought so.
right? If it
Okay.
doesn't say that, chances are it's a spot chart.
And now, if you were to leverage, or I guess monitor the leverage, you would want to consider looking at the perpetual versus the spot.
Because that'll be the most accurate one. Yeah.
Gotcha.
Yeah.
Okay.
Yeah.
Thank you.
Like, yeah, you'll notice they look exactly the same, but it'll be the most accurate chart, the one you're trading.
Alrighty, I'm going to jump in the background. Blunt, thanks again for everything. Appreciate you on here. Have a good weekend.
No problem at all. You're very welcome. This is the FEG chart from, this is Gate.io. I don't know if I have the other feeds on here. This is MaxC. Right? These charts perform the same all the time, right? Look at the support from the 50. This actually looks very similar to the Jasmy chart, that came out of a big downtrend, consolidated, and then was able to capture the 50, right? That's what you want to be able to do. And I remember when we did these ages ago, we were talking about for FEG to get above the 50 and start trading above there, that starts to set some new levels and some new parameters of where price might go moving forward. And you want it to hold that 50 if you're long, right? And where's when you look into the gaps, and this what's kind of what makes crypto so interesting, because every once in a while you see this, that something will be just consolidating, and of course you get this big massive gappy area up here, and price just goes boom right into it. Right, so these are the kind of charts that actually I kind of like paying attention to now. So, maybe I end up buying some more FEG here. I don't know, but you do it on the hope that it blasts up into that area or tests. There's the 200. What else is up in here? Probably the 100 as well, somewhere around there. So there's upside opportunity, and we don't look at these charts any differently than we would a stock chart or a commodity chart. We analyze them exactly the same. This is a stock called CoreWeave that I have not traded. But does it not remind you of the layer chart that we looked at a couple weeks ago? Like just go straight up. So, you know, it's not just crypto that goes straight up. There's a lot of things that every once in a while will do this. They will retrace as well in a violent manner, yes, but they're fun. They're fun when you're on the right side of them. But it doesn't matter what it is. We can track the price, we can trap price, and we can trade it. And we have the metrics to use to support what we do and how we do it. This is the perfect example. So one of the things I was asked is, you know, what can we use to determine where to buy and sell? I like to buy at the 50 MA. So if I have a preference on whatever time frame I'm trading, I prefer to buy at the 50. Secondarily, a major moving average. Sometimes, you know, you'll get, this isn't quite there, but sometimes you'll get the trilogy of the 20, 50, and 200 wrapping together. Those kind of scenarios are also excellent. But as a rule, I like to buy off the 50. Buys off the 50 have a statistical advantage of other moves, which is why I like it. But the 200 qualifies as well, any major moving average, but I typically like the 50. And I'm looking for price action in and around the 50 as I'm using multiple time frames, because support at the 50 is meaningful. Failures of the 50, falling through this blue ice, is problematic. When you're above the ice, not so problematic. But if you look at the 4 hour of this CoreWeave chart, and you would be looking at multiple time frames to try and determine how safe your trade is, but on this 4 hour, you have no reason to be exiting the trade. Like, again, we only have one candle to go through at a time, but at no time did it tell us that our trend was broken. There's our buy signal in the center of your screen, and there's been no looking back since. Now we're going to end up here in the not too distant future, probably testing some of these levels, but not yet. We're still trading well above, you know, 20 to 50, the T line, all of that. So, you know, we're in an uptrend here with CoreWeave. Okay. Any other symbols you guys want to look at?
Yes, we talked about TRB a few days back. There's actually two, TRB and mask.
TRB, is that right?
Yeah, TRB USDT. Yeah, crypto.
Yep. So what is that chart telling you? Right? Well, we are still moving up.
Moving up.
Right? Still, you know, that's a 4 hour, it's still bullish.
I don't remember if we looked at it last week or Tuesday.
Yeah, I think on
it was
Tuesday.
Yeah, it was.
Yeah.
Was it Tuesday?
Yeah, I think so.
Yeah.
But yeah, this is all like for anybody watching, right? Whether they're in the room or they're watching on Twitter or on YouTube. When you see this, you see price riding up those levels, doesn't matter the asset. They're trading on the north side and that divergence is still intact. You're still on the right side of the trade. And is all we're doing is doing what the market is telling us to do. That's all we're doing. Even on these crazy candles here, And we've talked about this before, and this is a great chance to try and take these candles off to show you. So your divergence is intact, and you can obviously see that you've broken levels, but there's obviously, you know, by these points that are created that there's an impulse in price moving higher, but at no time did you get a sell signal here. And what you have ultimately is, if you were short, this candle here just ends up being a flush candle. Is all it does, it pops to a major moving average, literally to the penny, and pulls back. And when you see that divergence that's still intact after failure of a critical level, and then you see these equal tops that form, usually I interpret that as an opportunity to re-enter short if it washed me out or stopped me out. Because that's what you'd be looking at on the right-hand side of your chart. You'd be looking at a confirmed downtrend, a big green candle that just tested a critical level but didn't break it, all while this divergence was still intact. And it actually, if you see, it's actually arcing back down on this candle too, which is telling you you're going to get a snap back down. That's what you get, snap back down. And then what happens? You take out the previous wave's low. Right? Boom. Time and time and time again, we show this. And after a while, this candle's actually melting as we speak, but after a while, this will become instinctive for you. Right? You won't even have to think of these things. It will become absolutely instinctive and reactive. And that's like when Ben was here a couple of weeks ago. It's an easy say, but a hard do. But once you get there and you have the trust in your charts, do you remember we talked about this 4-hour candle falling into this gap? Well, here we are, right? Let's see what happens to it. No one can say we make this stuff up because we show it in real time. Like Ben was saying, it's an easy say and a hard do, though, to follow, trust your charts to the point where you're literally reactive and instinctive, right? There's a handful of people that I know that I can honestly say that are like that, and one of them I do want to bring in here for you guys to meet. But that's the way that you need to be. No think, just do. And the less you have to think about, because you're more confident in what you're looking at, the better off you're going to be, and the more likely you are to make that instinctive decision. Like as soon as you feel giddy with excitement, I know somebody, as soon as he feels like that, boom, he kills the trade. I take my toys and go home. Because that's typically a sign for him that he's into a place that he will only get to be in for a short time, and then it'll probably turn the other way. Because it's instinctive for him. Seen the setup a million times. Had that feeling, quote unquote, a million times. Well, it shouldn't take a million times for you to be able to realize that, might not be in your best interest. It's like, how many times do you have to take your hand and stick it on a hot burner before you realize that that's probably not a good thing to do? You don't want to get burned more than a couple times in your life. Once is usually enough. Right? So try and find the rhythm. And for all of you, it's going to be a little bit different. I appreciate that. But try and find a rhythm where you feel comfortable making decisions quickly. And if you find that you need to demo trade in order to do that, then do it. Like, get on to BYDFi. Right? My link is in at Blunhouse TA on YouTube. The link's in there. Jump on BYDFi and start demo trading. It's a great way to test exactly what we're talking about. You have faux money to trade with, but try it. Test yourself. Like, don't be afraid to challenge yourself. And you don't have to use, your own money to experiment. Don't be afraid to do the demo trading. It's a great way to test things. I do it. Right? The only thing I will say is that I find when you are using real money, the meaningfulness behind it does matter. So train yourself on the demo account and then try and apply it with real money. And I'm sure you'll notice that, geez, it does feel a touch different. Okay, more reason to not overwhelm yourselves with the technical elements, right? But focus on what works and mastering that. Again, less can be more, right? So all I'm working off of here is the volume profile in our script. That's it. When to buy, when to close, when to buy, when to close, however you want to interpret it, or when to short and when to close. Any market, any asset, any time frame, it works. Is all you have to do is just do what you're told, right? Like our mothers yelled at us and our fathers yelled at us as we were kids because we never did we were told. The cool thing was to be rebellious, right? Well, now later in life we're going, maybe that wasn't the case, right? Doing what we're told is not a bad thing. This market, any market, does not care where you went to school or if you went to school. It doesn't care what language you speak. As long as you can speak the language of the market, that's all that's going to matter. It doesn't know where you live. It doesn't know if you're attached or single. It doesn't know if you have brothers or sisters or whether you have a cat or a dog. Nor does it care. Nor do the people that trade the markets, both stock, commodity, and crypto, care about you. Those people trading the markets are only concerned about themselves. And that's how you should approach the market as well, in my opinion. No one is going to look after you better than you. Something my father used to tell me when I was a kid. It just took me many a decades to actually figure out what it meant. And what it means to me is that no one is going to look after what you see on this chart better than I can, for me. No one is going to look out for me better than me. Period. I am comfortable and confident enough in these charts to make the decisions that we talk about all the time. And I appreciate that it didn't happen overnight. And I don't expect it to happen overnight for anybody in here. But I am certain beyond a shadow of a doubt that all of you have the opportunity, by learning how to read price on a chart, to change your lives in some way, or the lives of someone else. Whether it's, trying to supplement income, thinking that, you need a part-time job. But then you stop that because, I got to get a babysitter now. Well, you know what? If you're doing this, and your objective really is to get a part-time job to make, a few $100s a week, you can do that from your living room without a babysitter or while your kids are asleep by doing this as an option. However, it does require discipline and professionalism and dedication, but it's doable for each and every person watching this and here right now. We're all led to believe that for some reason it's too much for us and that we don't know enough, and it's all risk. Really? Why? Why is that? Why is that always what we're told? Why? I don't understand. Because I can tell you right now that the market, I don't need anyone in a three-piece suit and shiny shoes to tell me to buy here. I don't. Don't eat the grains that are laid out for you by these people. All you need to do is learn how to read price on a chart, and you will make those people look like village idiots each and every time. Not that that should be your intention. However, nothing should be able to get in the way of what you see, because you know that it works. I've never worked in the oil business. I don't like to change the oil in my car. I pump my own gas because I have to. In other words, I really don't give a rat's ass. I like listening to people in the oil business. It's entertainment. Sometimes it's educational. However, I can assure you that not one of those people know how to read price on a chart like we talk about in here. And those same people kept telling you that price was going to go up. And yeah, we can play the tapes for a year and a half. And it's gone nowhere but south. But they know about the business. But someone who manages your money knows about money and oil too. Do they? Do they know how to read price on a chart? Did the guys in 2008 in the real estate market that worked for Bear Stearns and all those people, did those guys know how to read price on a chart? Because if they did, they'd see the same stuff that we see in here. And they'd be talking about it, but they're not. Because no one's going to look out for you better than you. Two kinds of people: lion tamers and lion bastards. And how many lion tamers have you met lately? Very few. Learn how to read price on a chart so that you never have to worry about what someone else wants you to believe. Because maybe it's your financial advisor. I don't know. Could be anybody. Show me why you think that your advice is what I should be doing. Show me. Like if they tell you that you should be buying oil here, I question their sanity. Right? Like, and I'm not talking nonsense. This happens every day. And some of you probably have already experienced it in some way, shape, or form. And you wonder what it is that you could do to provide yourself with a little more assurance that you're either getting good advice or you're not. How about this? Doesn't this do that for you? It does for me. Because it separates the what money is doing from the what people are saying. And we only care about what the money's doing. That's it. Everything else is just noise. Right? The Twitter spaces that we go into and love so much, just noise. Right? Our business news, just noise. It's all just noise. That's all it is. The only thing that matters is what you see on the chart. That's all you can deal with. Right? When the chart and the market tell you that it's time to buy, you do that. And as the chart tells you that you're on the right side of the trade, well, then I guess you can do that too. But you're the only one that can act on the information that you get. Right? So this is a process, right? You're not going to learn it in 5 seconds, but I think a boot camp would really probably get people to where they need to be. And then we're going to do a premium Blumhouse room where you come in every day. We're going to do live stuff twice a day and you get one-on-one work. So we can do these sessions one-on-one with people. Right? Now you're getting a little sell signal here on Bitcoin if you didn't notice. Right? This is how the script will work, is it will kind of flash on and off like that as the parameters kick in. And what's working in the background are some stochastic RSI and things like that that help filter the signals so that I get less false signals. So now you're starting to see it on the daily sell signal. You've had it on the 12-hour basically 2 days ago. And then the 4-hour, when did we get it? The 27th. on Tuesday. So on Tuesday, we started showing sell signals on the 4-hour, and then they just showed up on the daily. So if you're trying to get an idea of how to scale the time and how long these things can take, that's a real good example, right? So the rollover on the daily started, or sorry, on the 4-hour started 2 days ago. You're just seeing it today on the daily. And now that we start to see that, what are we going to do? Well, we're going to look to see where price might want to go, because we know where it's been on the left side. Now we can start figuring out where it might want to go. First thing we see is the upper value range. You're going to look for that. You're going to see that you're at and or starting to fail the 20. You look south to the 50 and you look south to the 200. If you wanted to be really anal, we could throw in a 100, but it's not meaningful up in here. So my guess is this gets pretty quick, pretty fast. Let's see this 4-hour gap again. There you go. Right. So you can see on this 4-hour, if you you really get into this gappy area here, how you can reach that target on the 1 hour, on the daily. Right? And that's why we do this multiple time frames. And you know, we go back to last Tuesday and there we are, right? We had earlier this week, we drew this line because we're like, hey, this could be top end of this range, and if it is, what does the pullback start to look like? And we're starting to see it unfold in real time, and we'll come back on Tuesday of next week and we'll be able to follow this stuff right up. And what you're going to be able to do is watch these streams or pieces of them over time, and you'll see whether or not we're accurate. And I think you'll find more often than not, we kind of go where we think we're going. As long as certain things stay consistent, that's where we go. So I got to jump out. I got another appointment to get to, another meeting, but I want to thank you guys for stopping in today, and we're going to pick this up on Tuesday. And if you haven't checked out smartgeekfi.com and fegtoken.com, please do so. And if you haven't opened an account at BYDFi, you can get a link from YouTube at Blunthouse TA. Thanks, guys. We'll talk to you soon.